Hello and welcome to the FMLS Market Intel Report. I'm Leslie Appleton Young, Chief Economist for FMLS. Our local housing market and the national market received some good news last week concerning the conforming loan limit. The maximum mortgage that can be purchased by Fannie Mae and Freddie Mac will in 2025 be $806,500, almost $40,000 higher than this year. Conforming mortgages not only have lower rates, but are also easier to qualify for than jumbos. So this is a big plus for the overall market here in Georgia, especially given the price appreciation we've seen in recent years. Mortgage rates continue to be the driver, some would say brake, for future home sales. And we all know that forecasting mortgage rates is more art than science. But looking at the mainstream forecast for 2025, there is a consensus that rates will be in the 5.75 to 7.25 range, with a gradual, albeit uneven, decline from the current rate of 6.8%. This assumes continued cuts in the Fed funds rate, and that depends on inflation at or near the 2% Fed target. All eyes are on the Fed and the upcoming meeting on December 17th and 18th, and that will provide the first glimpse of how it sees the economy post-election. Another cut would be a vote of confidence for less inflation, but this is not a sure thing. In recent weeks, the Fed's preferred inflation measure increased slightly, while the economy and consumer spending continue to grow at a solid clip. So caution with respect to future rate cuts is the operative word. Nationally, the housing market perked up a bit in October, with sales increasing 3.4% on a year-over-year basis. This is the first time in over 3 years that we've seen a year-over-year gain. And the latest numbers for the FMLS market area continued this trend, with a month-over-month increase in closings of 6.5% and an 8.3% increase in pendings. These transactions likely went into escrow near the end of September, when rates bottomed at around 6%. So it's less than certain these trends can be maintained given the upward march of rates since then. What we can say with certainty is that mortgage rates well above the 5.5% action threshold will be a reality at least through the first half of 2025. Timing the market is difficult at best and rarely successful. So what's a buyer to do? Here are a few things to consider to get the best rate and terms. Make sure your credit score is as strong as possible. Investigate down payment assistance programs. Have your financial resources ready to go, and identify the loan products and terms best for you. One more thing. Last time I mentioned a mortgage rate buy down as an option that can make the difference between buying now and waiting a few more years when prices will be even higher. How does that work, and what difference could it make? A 2-1 mortgage rate buy down is a financing technique where the seller pays upfront to lower the mortgage rate for the borrower for the first 2 years of ownership. The rate is reduced by 2% in year 1 and 1% in year 2, returning to the original market rate in year 3. So if the original market rate is 6.5, in the first year the borrower pays 4.5, and in year 2, 5.5. This buy down lowers initial payments, which could be helpful for buyers, particularly first-time buyers expecting income growth or planning to refinance before the higher rate kicks in. In today's market, where homes are sitting on the market a bit longer and more listings are seeing price reductions, this tool provides an incentive for buyers without reducing the property's price. For example, if a first-time homebuyer purchased a condo for $378,000 with the 2-1 buy down at current rates, this buy down would provide over the first 2 years of the loan a savings of over $6,800. Compare this to the impact of a $6,800 reduction in the asking price, and you can see why a rate buy down might be the way to go for both sellers and buyers. Talk to your mortgage professional for details. Take a look at market intel on the FMLS website to access the most current market statistics. They're updated weekly. So if you are interested in resources relevant to our market dynamics, we've got you covered. For FMLS Market Intel, this has been Leslie Appleton Young. See you next time.